Hi everyone. Now, I so this guy was, have you recognized this, this penguin running around the venue? And this is the alpha guys. I'm really really excited to share with you our next panelists. Okay, guys. So in this panel, we have a lot of animals coming up. So we we're gonna have one panda, one, two penguins. Yeah, and we're gonna talk about the next era of liquidity. We have Smokey from Berachain, Jake from Mitosis, Luca from Pudgies and the Abstract team, and Andy from Binance Labs as a moderator. Please give them a warm welcome.
Penguin mascot, please exit the stage.
Hello, mic test. Hi everyone, this is Andy from Binance Labs. Binance Labs is the venture arm of Binance, and thanks everyone for coming here today. And yeah, let's start with the panel. So maybe first thing to ask is this is the last event of the KBW. What are the insights you guys have gathered, the takeaways from interacting with everyone for the past few days?
I think one of the major takeaways for me has been that I thought that Toronto traffic was bad. It turns out that Korea traffic is way worse.
Huh.
I've been told that Thailand is incredibly problematic as well, so we'll have that for DevCon. I think on a slightly more serious note, it feels like the Korean crypto scene is pretty alive and kicking. And even though there's a little bit of doom and gloom in the West, it very much feels like the ecosystem is really coming together over here. I think the second takeaway would be that Bear is in control. I think that's all I got.
Yeah, I think the key point of KBW is to handpick good events like this. Yeah, and I basically did several meetings, and most of the time I was just spending my time in office and working hard. We're just about to launch our public testnet soon, so yeah, we need to work hard. So yeah.
I think there's two takeaways that I think were super meaningful for me over the last couple of days. The first one is I learned Smokey's headset over there can be bought on Amazon. So looks like tonight I'll be shopping for a new headset. And I think the second one is there's something really powerful about the Korean crypto culture that last time I was here in Seoul I didn't really feel it the same way that I think I felt it today, or I think the last couple of days. So going to be really interesting to see. I've always been a huge advocate and thinking to myself that the next wave of the crypto run is going to come from the East. And I think the more I travel around Asia, the more I believe that. So I think that'd be my biggest takeaway.
Nice. Yeah, I wanted to start off first by asking, what do you guys see is the big problem in the industry today? Because I think it's a little bit broken. And how are you guys going to planning to solve it through whatever projects you guys are in?
Yeah, I think there's just been a real lack of bears. Anyway, so to be somewhat serious for a second, I think it's really easy to have the cop-out answer that'll give you to start, which is that there aren't that many applications that people want to use. I think that the funniest thing that I heard over the week was, are you building for the non-existent consumer, right? Which is to say that there's a lot of people building ivory towers and these highly technical castles in the sky that sound great in theory and maybe are interesting in concept one day, but end up being highly inaccessible and just intimidating and unusable for most people. So I think on one hand, I feel like we've lost the plot a little bit. And we've just sort of ended up focusing on things that are very nice in concept but are very impractical in application. And I think that we also don't have that many applications in crypto that have real product market fit or really have a chance of getting people to use them easily. I love DeFi. I'm a DeFi guy by nature, but I don't think that DeFi is necessarily going to be the killer app that takes everyone on chain easily in the early days. I think it could be a funnel down the road, but I think that right now, for example, if you're building solely in DeFi, you're hitting between 2,000 and 20,000, let's say, if we're optimistic, consumers. Whereas I think there's a large and interesting future when it comes to the applications that exist at the intersection of sort of like one would consider a traditional Web 2 product with a degree of crypto under the hood, whether that be tokens for greater incentivization of certain behaviors, whether that be for faster settlement and payment, whether that be simply as a means of allowing you to do more, I'd say, greater degrees of composability on chain. And I think that's sort of what we need. So when I think about what Berachain specifically is doing to fix the current state of things, I break it down into a couple things. One is that the whole concept of proof of liquidity has effectively been built to allow the chain itself to drive value and to drive incentives and rewards to the applications building on top of it. Like Berachain really is the first ecosystem that rewards the people who simply use the chain and its applications. This allows these applications to reduce their customer acquisition costs, increase their capital efficiency, bootstrap their liquidity more easily, and really sort of I'd say cross that early chasm of death and that tricky valley when you're trying to really reach escape velocity and on one hand manage building an application and a product, on the other hand managing your own token liquidity and your ability to attract users towards it. And then the second thing is I think that we're focusing heavily within the ecosystem on supporting and building and working with builders who want to create products that we think have a chance of actually getting used one day. I think it's really fun to build weird DeFi stuff, and I have lots of fun nerd snipe conversations of that sort. But we're also very excited about the things that feel like they can really onboard like hundreds of thousands and millions of people in a non-corny, non-fake KYC user manner, which I think we've seen a lot of over the last couple of years, right? So for example, there's an application that we're really excited about called Over Under, and these guys are effectively building a computer vision powered esports betting platform. So it actually takes streamer data and allows you to effectively in real time calculate the odds of any given event happening in a game. Something like that really benefits from being on chain in terms of easy access to liquidity, in terms of instant settlement of those payments, but also allows you to really easily have that distributed to tens and hundreds of thousands of people through Twitch streams. So that's just one example. There's Puffpaw, which you and I have joked about a bunch, which I think is going to be lots of fun. I think that these things are uniquely also enabled by a culture that is meant to be, I think, like fun in the front but serious in the back. So sort of the opposite of the classic crypto mullet, right? We try to have an approachable, fun, somewhat ridiculous brand. I'm on the stage in a panda mask. We had a dude with a penguin behind him. Like, I think the industry benefits from this, to be honest. And I think that the combination of effectively a chain that's built to drive value to its applications and a chain that's built around a culture of fun competency can go a long way.
Yeah, so the main key takeaway here is that I want to make here is I believe that liquidity nowadays are pretty saturated. Like there's like so many different chains, but the liquidity is a very limited resource. And when you try to allocate this liquidity, you have like all these other options, but in the reality, most of the liquidity are being held in decentralized exchanges or being idle, which means there are more liquidity that we need to target. And the key takeaway that DeFi is more powerful is that we can create composability around these assets. And by having this composability, the rehypothecation is like a default feature for that centralized finance cannot even kind of mimic. So through mitosis, what we're trying to create is we want this passive liquidity that is underlying in these like centralized exchanges or just like kept idle to be utilized into more on-chain. So we work with multiple chains basically. We're currently working with 8 different chains, and we deploy something called a vault. And through the vault, users can deposit assets into the vault. And essentially, what it does is the LP assets in the mitosis chain, you can decide where to allocate this underlying liquidity. And we know that people not really kind of participate on the on-chain governance. So as a solution, we took is that we made people to delegate their voting power by providing liquidity into dApps on mitosis. So in that way, we can efficiently make users to become a passive user, but in the same time, become the capital being more active and active. So we create this like the flywheel in mitosis, and we try to prove that our bet is right. So that's like what we're trying to solve in mitosis.
I think when I came into the space 2.5 years ago, I talked to some of my business partners who ended up acquiring Pudgy with us, and we ultimately thought that the space had a branding and a marketing problem. And I felt like too many companies within the industry were waiting for consumers to come to them rather than coming to consumers. And a lot of what I want people to look at, specifically from a Pudgy Penguin perspective, is Pudgy is a Trojan horse to onboarding people on chain in a way that is not predicated around price going up or price going down. It's around acute culture, a universal IP that anyone can identify with that meets people, whether they're 60 years old or 4 years old or a man or a woman or, any ethnic background in any part or any region within different parts of the world. And so I think we've done a really great job of that in cultivating a community that I think is, in that respect, unparalleled within the space, because I think it speaks to just so many different people. On the other side, we've recently announced that we started creating a company called Abstract, which is our chain, that's going to start powering all of our ecosystem products. And ultimately, what I started to find when I started, figuring out which chains, Pudgy wanted to actually build on top of, I felt like there was this huge gap in how people were focusing and prioritizing consumer adoption, and ultimately building the right consumer tools and the right consumer platforms to take somebody from a non-crypto curious or a crypto curious user to a crypto consumer almost seamlessly. And so we kind of decided that we wanted to tackle that problem as well, and then ultimately that's how Abstract became conceptualized. But I think when I want you guys to think about what we're doing, which ultimately is the igloo, which holds both of these businesses, is we want to solve crypto's branding and marketing problem, and we want to meet consumers where they are, instead of waiting for them to come to us every time the price goes up and leaving us when the price goes down.
Right, I really love that. Since we are on the topic of next era of liquidity, I don't think we have liquidity in crypto. And like institution money is into ETFs, smart money is into seed rounds, dumb money is into meme, and there really isn't much liquid. Like, what are your thoughts about getting the next source of liquidity? Like, where does it come from? And will it ever come?
Are you asking who buys our bags next, bro? I think that's a yes. I think that the answer is a little bit closer to actually what Luca indicated, in that I think that right now we do have a pretty deep barbell in crypto, in that on one side we have these large miners, whale farms, like these groups that will be moving somewhere between 7 and 9 or 10 figures of capital on chain, but they're often very concentrated and very cabal-like. On the other hand, we have effectively click farms across a number of different regions, whether that be African countries, Southeast Asia, whatever it might be. They're just playing these tap-to-earn, airdrop farm type products. I do think that what actually is really required is applications that are easy to use for the consumer. And I think that, again, I think the idea of consumer crypto, or that phrase, is a bit of a meme, because at the end of the day, any product should be usable for the average consumer. I don't think it has to be like, this is a consumer product. I think it should simply be a product that people can fucking use, which is just crazy to me that this has emerged as a form of branding. I think a lot of that comes from, on one hand, simpler user experiences, and I think that we're seeing that with some of the account abstraction work we're doing. I think we're sort of starting to see that with just better on and off ramps. I think we're starting to see better mobile experiences, stuff like Coinbase smart wallets, etc., that allow you to just log in, use an app, use your credit card to pay, use your Apple ID to pay, etc. So I think a lot of those things will actually help make that next wave of people, more open to using crypto. So I think it's like that middle range, right? It's the people who are probably a lot like us on this panel, in that they're probably somewhere in their 20s to 30s. They're doom scrolling TikTok and Instagram a bunch of times. They're somewhat risk on. Perhaps they're gamers, gamblers, sports bettors, something of the sort, or just your average consumer who sees something interesting to engage in. And I think that a lot of what will actually need to happen for those folks to engage is kind of closer to what Luca was saying as well, right? There needs to be a little of a revamp on the branding side. People don't need to associate crypto with FTX. They need to associate crypto with, funky animals and the such. And I do think that there's something to be said about building applications that people actually want to use and that are only found on chain. So I think we think a lot about how we can, effectively identify applications that really do benefit from being in a crypto, enabled or an on-chain environment, and B, that actually have a chance of making it out of the hood, like a chance of really reaching some degree of meaningful usage or adoption, right? Think about something like CoStar, right? What if someone built like a CoStar type product on chain? We've even joked about that internally, right? But stuff that has massive, I'd say, potential for virality, stuff that has massive potential for user-generated content, all these sorts of things are what I think will actually allow crypto to onboard its next set of bag buyers or whatever we want to call them.
Yeah. So when you think about liquidity, like the liquidity that like someone has, it's not like treated equally, which means basically it's that if you are smart money, you get into the deals like VCs and these like very opportunities where only limited numbers of people can invest. But if you're retail, you basically can provide liquidity into open protocols, and you get returns in exchange of that. So what we view is that like there's a huge discrepancy between how like liquidity is being taken in the industry, and there has been always like a very private deal of providing liquidity into these like projects, and in exchange of that, you get these like very mercenary or predatory deals. You get like tokens that are non-vested, and you dump your tokens into market, and things always happen. But as a retail investor, you never have these kind of exposure on like what really happens into the market. So essentially, what we're trying to solve here is to create like a public pricing for liquidity, where people can actually view what my pricing of the liquidity is, and if I'm providing liquidity in the right space. And what Mitosis is trying to solve is gives like an indicator of your liquidity is actually valuable or not. And from a private market of like negotiation part where like whales or institutional providing the liquidity, it can provide like a very good starting point where you can start the negotiation, not by having like these predatory deals. Yeah.
So I think the question is where do you think the next set of liquidity is going to come from, if I was not mistaken, Andy? And I actually think that's going to, I think it's going to come from Gen Z and Gen Alpha, and I think it's going to come because they want to have fun. And I think Smokey is probably one of the only other groups that I think looks at it in this lens. But if you actually remember, and maybe I'm speaking for myself, but actually a lot of my peers and the people that I work with within the space, you know, maybe we came in here because we wanted to make money, but I felt like I actually came in here because I was having fun, and it felt fun. And I feel like this is a misguided emotion that I think a lot of teams up until this point have totally haven't doubled down on. And so from our perspective, I think Gen Z and Gen Alpha is digitally native in a way that I think the other millennial and boomer generation isn't. They are making more money today than I think most people realize, and they want to spend that money, and they want to do it, and they want to have fun. And I think that's where the first set of 50 million users is probably going to come from. I think that's where consumers are going to break through in a way that I think crypto's never seen before. And I think the narrative is going to go from yielding and compounding money and all of these amazing technical achievements that we've probably achieved over the last couple of years. But the TAM there is probably a couple 100,000 people, and then it drops off a cliff. While fun is universal, it doesn't matter if you're in Asia or America, it doesn't matter your age range, everybody wants to have fun. Everybody has, at some point in their life or at some point during their day or their week or their month, has a bucket of money in which they spend around discretionary spending, and they spend that to occupy their free time. And I think crypto is one of the best places for that liquidity to go. So my answer would be Gen Z, Gen Alpha, to go and use crypto rails to have fun. And I think the companies that capture that fun are going to be the ones that win.
Yeah, I completely agree with that. I think like each one of you have your own strength. And I think, Luca, you are more like, you have a very interesting strategy, like targeting the Web 2 and Instagram and YouTube and like girls, boys, young, old, and everything. And then bringing them into Web 3, more on the consumer and branding. And then Smokey is like really good at ecosystem building. And I think like L1, L2s, there are just hundreds of them. It's just impossible to fight. And I think you have like something really special, like the BD strength, like and then for Jake, like it's about DeFi, it's about liquidity, and yeah. So like, what is the like? Could you elaborate more on the strength that you guys have?
Yeah, sure. So I think that, going a little bit back to stuff that I touched on a little bit earlier, I think there's two things that we do a lot at Berachain. One, and something that I believe in very strongly, is that it is very difficult to buy, I think, someone actually caring. Like, I think it's incredibly difficult to make someone say, now I believe in this, or now this is something that I want to, regardless of financial outcomes, et cetera, dedicate time and attention towards. And I think that that's something that we think about a ton from like just a psychology perspective. How do we actually build an environment, and how do we build a culture, and how do we build a group of people with positive network effects that actually really believe in a concept or an idea? Because I think that if you do that, it's actually not entirely dissimilar from like how religions are formed, right? And then that can have all sorts of weird connotations, but what I mean is belief goes a long way. And I think that the way that we try to facilitate that within the Berachain ecosystem is really trying to like uplift as many people who are building interesting, differentiated new things as possible, and setting a very high bar for performance. I think that we've seen a ton of ecosystems in the past really just plagued by this average low bar for quality of applications within an ecosystem. So, a new chain will go live, and for 6 months you'll just have a stream of shitty DeFi forks and maybe an OpenSea fork and, something else, maybe a name service if you're really lucky. And there's just very little of interest for anyone to really engage in or get excited by. And I also believe in the concept of like attracts like, right? One of the oldest concepts in chemistry, the whole idea is that like if you have a bunch of shitty builders, you're going to get more shitty builders. If you have a bunch of really cracked builders who are building interesting products that have their own brands, their own beliefs, then you're going to attract more of those, right? And I think the more zealots that you can build, the better. So for us, we think a lot about how we can work with the ecosystem teams, not just to give them a fish, but to teach them how to fish and to figure out how can we help upskill them as founders, as leaders, as people building their own businesses. And then that sort of leads into the second point, which is to say, Berachain at the end of the day, we focus on the application layer above all else, right? I think the chain itself does not matter. The chain should not be the main character. We are ideally there to help with distribution, help with growth, but really the power of Berachain is that it is an accelerant for the application layer, because the chain itself, every time it's producing a block, is pushing those emissions and those incentives towards the applications, making it easier for them to onboard users. So really, I think that we try to create an ecosystem that builds itself and gives itself the opportunities to succeed, and we try to mechanistically enable that at the financial level from the chain as well. And I think that what that ends up with at the end of the day is not. It's ideally something that looks more like a social or a community validator set than anything else, in that you don't want Berachain to be me or our team members. You want Berachain to be the culmination of a number of strong nodes of different community members who each form their own groups, their own tribes, their own audiences, and the sum of those parts is what really causes a win condition, right? So when I think about our strengths, it's turning liquidity into security with proof of liquidity, using that to help applications. It's setting a really high bar for performance in the ecosystem apps and differentiated ideas, and it's allowing these mini tribes to form that all sort of help each other along the way.
Yeah. So one of the key differentiator in the market that Mitosis has advantage of it is that our success is not like our KPI is not to make Mitosis chain into the greater form. It's more like we're more like augmenting factor for all these other chains, where you have these like vault contracts on many different chains, and we want to accomplish something that people provide liquidity on one chain through Mitosis, and then whatever the yields are generating in the highest place, the internal governance process will allocate that liquidity to somewhere else on behalf of users. So it's something like this. When there's like so many different chains right now, we believe that there's so many passive capitals, which means we want users to be active, but in the reality, like the liquidity is the only thing that really matters when you think about the KPI of the success of the chain. And when you try to make all these like active users in the on-chain ecosystem, I'm pretty sure that like the Abstract will like make a like actual product that is working for the retail. But trying to be real when it comes to like liquidity going into the DeFi, we believe that entering the passive capital to enter into DeFi in a more seamless way is the main takeaway that Mitosis is trying to achieve. And by having the ecosystem on liquidity, we think that we work with all these like different chains, and we make this capital to be like moving over these different chains and help these liquidity to gain more rewards for users. And yeah.
And I think from our perspective, I want to play an important role in a certain niche within this industry, and I think there's multiple niches that I think will be super impactful and significant in terms of where crypto goes and how it grows. I think for us, we want to be the guys that lead consumer. I think whether you look at what Pudgy Penguins has done and how it's broken through in a mass, I don't think there's any other case study that this industry's ever seen where you've seen a consumer brand break through the way that has. On the other side of it, we have Abstract that I think is really positioned to add an extra layer to support people in a way to kind of build the same way that we've built at Pudgy. And so I think from our perspective, what makes us the team to do that? I think first and foremost, it starts and stops with our community. Ultimately, I think we have some of the best champions within crypto. If you understand Pudgy and you understand the Pudgy community, it is a group that is super passionate, is super aligned, and they do their best in terms of giving crypto and building crypto in a positive light. On the other side of that, our team has been building mass consumer products and brands for the last 7 or 8 years, and I think we're just best positioned to understand what it means to build a good consumer experience and a great consumer journey. And then the last one is probably our marketing expertise. I mean, this is where I pride, our team's talents the most. I think we just understand, viral marketing and viral distribution in a way that I think very few, if any, teams understand within the industry. And we want to bring that superpower, and we want to support builders and community members, and we want to leverage what we've been able to kind of figure out over the last 7 or 8 years, and bring that distribution and those rails to the rest of, crypto and, other parties involved as well. So I think that's kind of how we're looking at things.
Cool. Yeah, I think we are about almost over time now. So maybe what is the next big thing for you guys in 30 seconds for the second half of the year?
Yeah, I think for us there will be a long-awaited mainnet. So after a couple years of building and a whole lot of fun along the way, we're going to be graduating and launching our chain, launching our token, and hopefully having a lot of fun along the way with every funky app that one can think of, whether that's weird DeFi or incredibly weird consumer.
Yeah, for us, we'll be launching our public testnet pretty soon, and before that, we'll be launching our public testnet waitlist. So, as I mentioned earlier briefly, that once you attended IRL in this event, you'll be receiving an email for the waitlist code, and it's basically like a super pass code that you gives like you can bypass all the waiting lists. So yeah, we'll be launching mainnet hopefully by end of this year. Yes.
Yeah, last year Pudgy kind of broke the internet when we went to Walmart and Target, and I think we've got something that's bigger than that, if it can get any bigger. So I'm excited to share that when the time is right, and I'm excited to prove ourselves. I think nobody believed in us when we bought Pudgy 2 years ago, and we said we would be the #1 NFT project. 2 years later, here we are. Regardless of maybe a CryptoPunk is more expensive, I think we are the biggest and the baddest community and project in the space. And we're going to do the same thing with Abstract. I think a lot of people are fading, and we're gonna be the #1 L2 in the world, and I'm confident of that.
Nice. All right, I guess that's about it. Thank you everyone for the time, and yeah.
Woo. Okay, guys. for now, we have, venture capitals, VCs. They play a really important role in this crypto, backing all these builders. And I just wanted to introduce you to our last panel for Liquidity Summit. We have Sam from Big Brain Holdings, Will from Third Earth Capital, Alex Shin from Shin Labs, and we have Andy again from the Binance Labs. Please welcome them on stage.
It's my first time meeting half of you guys here. So actually, no, we met before, Sam. Will, for sure. Yeah. We only have 25 minutes maybe, because Andy has to go catch a taxi ride. We're going to run through to some quick intros, and then I'm going to throw some curveball VC questions, but let's keep it pretty casual. Feel free to throw some questions our way, each other way, whatever whatnots, right? Let's start with you, Will. There's no description behind you, so you got to really let them know.
Test. Okay. Yeah, I'm the most mysterious one up here. Also Alpha, I haven't even announced it, but I raised a fund this year. My name's Will. Crypto native asset manager. It's called Third Earth Capital. Started out in investment banking, went a little crazy, and decided to get a job in crypto. So I went to the Avalanche team. Worked really hard to build that ecosystem. At the time, was mostly focused on building the gaming narrative. So if you think of Avalanche as a gaming chain, thank you. And then I went to a small fund called Varus Capital, seeded Movement Labs, led that pre-seed, and then very quickly left to raise my own thing. So that's what I'm up to now.
Awesome, congratulations. Yeah. Sam.
All right, I'll keep it short. So I'm Sam, one of the partners at Big Brain Holdings. We're based in the US, and we've been doing venture investing since 2017, and we also have a fund of funds and a liquid fund as well.
Hi, I'm Andy, consulting for 2 years, and Huobi listings, Coinbase, MatrixPort, and Binance for 2 years now.
There's people in the back talking, but hey, for those of you in the back that's doing meetings, can you guys stop doing meetings in the back, or I'm going to call you on stage? Thank you. Can we run through and just talk about a couple of the categories of deals you're looking into? I feel like in the last 3 years, crypto as a category has really fragmented into different corners, right? So actually, let's go start from Andy for this one. Category. There's like gaming stuff. There's other ones. There's infra. There's apps, consumers.
For me, I look at 3 things personally. 1 is things that have never been done before, and 2 is things that have no market leader yet, and 3 is things that can bring Web2 users in, because I think we have no net users for the whole year, and it's kind of bearish if the whole pie is stagnant for it needs to grow bigger than it.
When you say users, are you talking like actual consumer users or people who buy coins?
Yeah, users like
Real users.
Yeah.
I like that. What about you, Sam? What is Big Brain looking into? I've
So
seen you guys on a lot of hot deals, so.
Yeah, we're a generalist fund, so we look at everything, and I'm one of the partners, so I try to look at everything, but historically, we've primarily had most of our investments in the infrastructure category, which is obviously pretty broad, but everything from L1s, L2s, bridging, middleware layers, et cetera. But we also invest right up the stack, and we do a lot of consumer applications, gaming, DeFi, et cetera. Right now, categories that we're excited about, we're always excited about block space. I know there's a lot of drama and controversy and exhaustion around the space, but I think we're still in the early innings of the space, and so there's going to be a lot of innovation. I think is still yet to be had. AI, I know that's another kind of buzzword, but we're looking really deeply at that space and really excited actually. And then gaming, we've slowed down a lot. I think everybody has, and it's a really tough time for gaming. But I do have a ton of conviction that ultimately we are going to onboard the next 100 million users through gaming.
The new fund on the block.
Yeah. So a lot of the stuff I'm looking at, just like in general, total generalist fund. But the things that I like to invest in, it either needs to be a big step up from like an existing Web2 business model. So I'll give you one, I think quite interesting example. I seeded Lever. They're on testnet right now. It's a leveraged sports betting protocol. And so, they're not just another sports book on chain. These are like institutional guys with hedge fund backgrounds who are introducing leverage to sports betting. And so my bet is crypto people probably want that. It's like, how can we gamble even more? But also it's actually new in the Web2 sports betting market as well. Or for more crypto native things like blockchain infrastructure and services, it also needs to be just a big step up or have some sort of moat, closed source moat, versus existing infrastructure. And so within services, I've seeded Nirvana Labs at the last firm and invested in their latest seed round with RW3 Castle Island Ventures. They have an RPC and a cloud product, but they built their own CDN, they built their own hypervisor, so they're not on AWS, GCP. So that's the kind of stuff that I look at, things that actually have revenue potential. Speaking of AI, AI is like tough for me, so I've gone further upstream to like just data indexing and services around that.
Got it. I wanted to start with kind of a broad idea and drill down into more categories as we move on. And for you guys, Sam, Andy, how have you seen kind of the venture landscape change, like in the last 2 years, maybe?
So you started from the ICO stuff, and then it kind of popped the bubble. And then people start looking into equity stuff, like B2B infra, like Figment and custody, that kind of thing. And then equity is also a little bit kind of like the exit plan is. And then after that, they move more into like the DeFi. That COVID came, and then the DeFi things came. And then more tokens come, and then 2023, 2024 is just a lot of copycats. One thing works, and everyone go and copy it. One thing works, and everyone go and copy it. So I think that's pretty bearish. Yeah, that's how I see it. Yeah, just lack of creative, independent thinkers in general. Yeah.
Yeah, I mean, I think VCs have always been trend followers. I think that hasn't really changed, and that remains constant. But I think overall, the space has become much more competitive. There's more capital with probably not as much opportunities and supply on the project deal side. And also, just VCs are getting better. They're being more selective. They're doing more deeper research. They're understanding more of the nuances around the technology much better. And so from a VC perspective, I think it is getting more challenging as the space matures slowly over time.
Is everybody here a pure play private like venture capital, or you guys do a lot of liquid stuff as well? Most of the major US funds are just quant funds at this stage, so I was just curious.
Do a little liquid, not much, but it's a small part of the portfolio.
Yeah, same. We do some liquid too.
Liquid stuff, that makes sense? Labs, probably not. No need
Yeah,
to.
it's mostly primary stuff.
That makes a lot of sense. All right. And so the category of deals you guys mentioned earlier, you do some more real stuff. You guys still do some deep crypto stuff. Can you guys talk about some other portfolios you've done recently? Anything public you can mention?
So Babylon, Renzo, Movement Labs, Infrared, Shogun, Evo, Milky Way. Yeah, probably a few more Particle Network, and yeah, that's just the deals that I've been recently.
Is everybody in Movement Labs except me? Are you guys in Movement Labs?
Sorry?
Did you do Movement Labs?
No.
Oh, good, thank you. I thought I was the only one. Whew. What about you, Sam?
So we actually did Liver as well together. So yeah, we're super interested in what's happening, and I think in interesting spaces within DeFi that hadn't been tried before. We did Monad and Mega ETH. Those are two kind of different projects that are trying to optimize for performance and throughput and latency with the EVM. I think in different approaches. So I think Keone was here before, and they're taking it with the alternative L1 approach, whereas Mega ETH is trying to be more aligned with Ethereum as an L2. And then on kind of the AI side, there's a bunch of distributed compute platforms and networks like Aether and Exhibits, which are essentially trying to decentralize and tap into a lucrative kind of and more cheaper set of compute chips, and using a deep-in model to help kind of remove again the middleman and provide a ton of efficiency. And we're already seeing that with a lot of clients actually being traditional AI companies, and again in Web 2. And so there's definitely like product market fit we're seeing there as well.
And then I'll start with you this time, Will. What's your guys' take? What your take is on the market sentiment today? I'm getting a little bit of both right now. There's a lot of people that's expecting a very, very bullish Q4. Maybe not after the last week or so. And then most of the VC friends around me feel quite bearish about this segment right now. Yeah, I want to go down the line and get your guys' hot take here.
I'll say two things that kind of tangential or dance like on top of that topic. One thing just like that I think is very interesting is that the retail who did not leave after like Voyager, Celsius, BlockFi, they're very smart now. You know, like they see the charts, they see the low float, high FDV, and a lot of them have decided just not to play. And that is burning many funds. And so it's like we're playing an interesting game where we need to somehow figure out how to get back retail who, I think it's kind of a meme. It's like, when will retail come? I think retail did come. Like, I think 2021, 2020 to 2022, there was a lot of retail, but a lot of them got burned. And so from that perspective, I'm like very neutral, cautiously optimistic. It's like, how do we get them back? But broadly speaking, I'm very, very bullish on crypto, obviously, but because I think we're going to have a Bitcoin-led bull market for the foreseeable future. Because institutions are buying Bitcoin, we have to figure out how to get people interested in other tokens as well. That's what I think is interesting to think about.
Hot takes on the market?
I think there's two sides to this. So there's the private markets, VC side. You know, I think by design, you know, we have to be optimistic. You know, we are generally kind of up, long only. You know, and we're in a very volatile and high risk environment, generally speaking, and so we generally do need to stay optimistic, and we're seeing that a lot in other VCs around sentiment-wise. In the public markets and liquid side, I think it's pretty bad. I mean, I would say the sentiment is obviously very bad. The markets, I think alts are down like 80-90%. Only really Bitcoin is up this year, and I think there's been a ton of, you know, dilution, too many projects, you know, not enough actual product market fit. I think generally just based on speculation alone, retail, as you say, has gotten smarter and gotten kind of pessimistic and exhausted on that front. And so there needs to be more fundamental traction, which I know we always like to speak about, but it's just the reality where I think we can see parallels with like the internet, where, you know, the first few projects were very speculation driven, you know, a lot of different ideas and a lot of visions and dreams about what could happen. But then, you know, after that first boom and bust cycle, we actually saw steady fundamental traction and growth over time, which was reflected in the stock prices and the stock market and, you know, the NASDAQ, et cetera. And I think we're at that really important time within crypto where we're kind of moving away from just speculation and narratives alone, and we actually need, you know, fundamentals. But that takes time, and with kind of the attention span of the crypto market, that's obviously very difficult.
Andy, you already touched on how there's a lot of copy pastas that you're not as quite bearish on, maybe, right? Just to chime on this, do you guys do more straight equity crypto infra things, or is it more token plays for you guys?
So I think that we have a lot of infra already, and with no inflow of new users, we are probably stuck. And if you look at the USV chart, they wrote a blog article about how there's different cycles. There's infra cycle and application cycles. And I think the next wave should come from applications. And I think we need more of that.